And now here they are. First, moderator, Big I President and CEO, Bob Rusbuldt. Joining Bob will be President and COO, Nationwide Property and Casualty, Mark Berven.
Thanks, Mark.
President and CEO, Progressive, Tricia Griffith.
Thank you, Tricia.
President, CEO, and Treasurer, EMC Insurance Companies, Bruce Kelley.
Thanks, Bruce, for doing this.
And Chairman and CEO, Selective Insurance Companies of America, Greg Murphy.
Well, welcome everybody again, and this is the real CEO panel. We got a little mix-up there earlier. I do want to thank the American Insurance Association again for sponsoring this. Been great partners, been doing this for many years. So why don't we start right out of the box here. You're in Washington, D.C., in case you didn't know when you woke up this morning. And a lot going on right now in Congress and the administration. And there are some major insurance issues taking place right now. Tax reform is near and dear to every single person in this room, and of course to you as your company leadership roles. What do you think about the Trump tax plan that just came out, lowering the corporate rate from 35% to 15%? Let's say that Congress even adjusts it to 20%. What's that mean for your companies? What do you do with all that extra cash? Mark, I'll start with you.
Billions.
Mark, what's Nationwide going to do?
Well, we were really surprised. We were hoping for a tax increase, actually. I think it's a great opportunity. One of the things at Nationwide, obviously, we're all about if we can find ways to lower the corporate tax rate. I think that's good for the economy, spurs growth across the board. One of the interesting things that we think about is, about 50% of our revenue comes from our financial services division. And I think part of the aspect of just looking at making sure that there's a clear understanding of some of the dynamics across the board to have a holistic solution that contemplates some of the good things about the products that we sell, that many of you sell, corporate-owned life insurance, some of the build-up products of tax deferment, what's in the best interest of a customer, and making sure that the tax policy is holistic in that regard. But obviously, we're very supportive of lowering the corporate tax rate and think it will be a great opportunity to spur some growth.
Tricia, Progressive, big company, publicly traded. Some of you probably own their stock. What's it mean for Progressive?
We're very supportive of the corporate tax reform and lowering the corporate tax. For us, it means our ability to really ultimately give that back to the customer, because it's the cost of doing business ultimately comes from that when you're a company that always strives to make at least 4 cents of underwriting profit. So we're excited about it, whether it's 15%, 20 or 25. It's less than what we're paying now at 35. So we're very supportive and enthusiastic about it coming through.
Bruce, same question, but also, what do you think about the border adjustment tax that has been bantered about? You think it's a good idea, a bad idea from a macro perspective? Do we need some kind of border adjustment like many of the European countries have, or not?
I'm glad you brought that up, because we are in favor of the border adjustment tax, and that's what the president has brought to the fore. In the past, we've been disadvantaged because foreign companies had a tax advantage even above, even more so than the 35% rate. But getting back to the 86 tax reform that is going to be unwound, in 86 the industry was not united, and so as a result we really got hammered. And so since we're 1% of the GDP, we're now paying 3% of the corporate tax. And we want to reduce that down through this tax reform, so we would be paying equivalent to the GDP rather than 3 times.
Greg, are you like Mark, you want to pay more in taxes?
Oh, absolutely. No. I got to tell you, to me, the devil's always in the detail, right? Just as you are out there as your agency, you think about, which play would be better for you in a subchapter S or subchapter C relative to rate differential. From our standpoint, it has a big impact on our investment portfolio. As you know, the industry generally has a significant portion of its portfolio in tax-advantaged securities. So I don't know what it's going to do to the tax-exempt market, because this depends on what happens to individuals versus corporations, because individuals are the bigger buyer of municipal products. So depending on what happens to that, we have a big investment in that sector. So that's one thing we're concerned about relative to the details. And then relative to border adjustments, you hear from reinsurers that, well, if a border adjustment tax comes in, it'll raise the price of reinsurance costs. I don't know if I necessarily believe that, because we don't sell our product or buy our product in terms of our reinsurance programs, whether one company's paying one tax rate or another. We set a rate for the program, and people participate on the shares based on how big of an appetite they had. But it will have an impact, I think, in the business relative to the IT sector. We all have operations that have satellite operations in foreign countries, and they have a tendency to be a pretty good-sized supplier of technology. So, they're trying to scramble to figure out what they need to do from a tax standpoint. So there's a lot of interplay. I'm on a tweet-to-tweet, and I'll hold off on making any corporate changes till the last tweet is done on tax reform. Until I get my last tweet, I'm not doing anything different right now. But I am planning a lot of different things, but we've seen these things migrate quite a bit.
You and Donald Trump.
I'm on it.
Yeah, okay,
I'm
good.
on it.
You mentioned municipal bonds, which of course are tax exempt, and the property casualty industry is the #1 holder of municipal bonds in the United States of America. But would you take the rate reduction from 35 to 15 and give up the tax exempt status of munis, or is that so important you say, I'm not going to reduce the corporate rate?
Well, to me or to someone else?
Not to you, because I'm coming to you in a second.
All right, fine.
To the other three.
Well, I guess everybody's staring at me on that one. You know what? It's a complicated question because of all of the other details of how the funding would actually work, and I would hedge, and I hate to do it in front of the group without having something very specific, but again, to the point, the devil is in the detail. I think conceptually it makes sense, but you would have to look at the other funding mechanisms to really have a position.
Remember, the president's proposal's 1 page.
And on a tweet.
Yeah.
140 characters.
My tax return was about 20 pages, so I mean, it's crazy stuff. Flood insurance, #1 issue here at the Legislative Conference. Huge issue for the insurance industry. For full disclosure, the Big I does endorse the Selective Flood Insurance Program.
Thank you very much for your business, by the way.
And if you're not in the Selective program, you can see Greg immediately after the program, and he'll sign you up. So just for that disclosure. But the flood insurance program is front and center. I believe that in the next 30 days or so, we're going to have something move through the Financial Services Committee. There's a move towards more privatization. The question is, will there be markets that are going to write in New Orleans, along the Florida coast, the Gulf Coast? Will that market exist? Now, I'm going to ask you first, Greg, because you are an expert on flood insurance.
Right, I am. See, this is the problem in flood insurance, and I'll give you a real life example. This way you'll better understand it. So Selective is a regional carrier. We write predominantly up and down the coast, and on the East Coast side. And to give you a sense, we paid out in Hurricane Sandy, or Superstorm Sandy, which I refuse to call superstorm, so I'll call it a hurricane. We paid out about $130 million in claims gross. On the flood program that we write, and we're the 5th largest flood writer, it bounces around between 5th and 6th in the U.S., we paid out over $1 billion in claims. And I think that in lies gives you some sense of, can this thing be privatized? No, it's too much of a concentration risk. Most carriers, including Selective and probably a lot of the other larger organizations, are already maxed out on their wind loads up and down the coast, whether it's Gulf Coast, East Coast, whatever. And so to sit there and think that that's going to go private market is just not going to happen, because they're already tapped in private in capacity and home and business insurance and other things. So why are you going to just add more PML or more exposure onto your balance sheet, and then just reinsure that off and assume more counterparty risk. And so to me, the trade is not going to happen. Will there be private market around the edges? We endorse private market, knock yourself out. We don't have a problem with that. I do have a problem with expanding the terms and conditions of the policy, because right now the premium's not high enough to start with. So why are we going to add more coverages in? I think they need to simplify the language of the policy and get into a better discipline on claims handling, because that's where the customer rub is. You and this audience get put in a very bad position with your customer relative to the rules and regulations that we have to follow on a claim that makes it a little bit more tougher from a customer service standpoint.
Well, Greg, when are they going to get rid of the deficit in the flood insurance program?
That will only...
I mean, are you going to contribute to that?
No, I'm not. But right now there is no private market. So unless you want to take those homes and make them worthless because they have to buy insurance at market rates, which they could do, those homes are going to get devalued. So again, it's the government at work. Government wants actuarial sound rates, but we want to be able to have everybody afford it. Those two things don't work with flood. So this is a self-made process that they're trying to work around the edges on reinsurance with, but that's no free lunch either.
So Bruce, is EMC ready to enter the private flood market and start writing?
We're not focused on that. We do have commercial flood on the difference in condition policies, but we're not going to be involved in this program. It really is a difficult situation when you have that billions and billions of dollars of deficit, and it's an underwriting situation. If you want to get involved in underwriting in areas that are prone to flooding, you're going to have to pay for that or charge for that.
Right. Mark, Nationwide used to be a write-your-own company, and you guys pulled out a couple years ago. Tell us a little bit why you pulled out and what you see for the future of flood coverage.
Sure. So, really, and I think it's been stated, for us, it looked up from a customer experience perspective and the dynamic that you all see every day, the reputational risk and the issues associated with the management of it, the continual communication that needs to go about reauthorization, stopgaps, confusion amongst the customer, the dynamic that we get into in the claim scenarios of how they're administered today. There's a reputational risk. That was a piece of it. Then you look at the financial dynamic of the program itself, looking at what could occur down the road as you think about what is going to have to come about to solve for the $25 billion that the program's underwater, no pun intended. That's a major issue and a concern that we looked at. But really, last week we had a unique opportunity through the Build Strong Coalition, NAMIC engagement, IBHS, where really trying to shift the focus and where we're exerting our efforts is trying to figure out how to overhaul the way that we manage disasters in aggregate. Moving more to mitigation, again, and we get into this whole dynamic of is the flood program, and I agree with Greg's comments about, you can say all you want about actuarially sound rates and having a fundamentally based insurance program. This is a government subsidy program that we get involved with as well. And it sounds great to come out with a program that has actuarially sound rates. You get more customers that buy in, but at the end of the day, there's a moral hazard that goes on that folks know that they're not really incented to buy flood coverage, because at the end of the day, after an event, what happens? And you constantly have the political pressure that comes about of taking care of those folks where it's the third time that the home has been flooded and we're going to rebuild in the same place. We're not going to change building standards, building codes, et cetera. So we're trying, and we think that there's a unique opportunity with the infrastructure and transportation bill that's going on right now to really begin to address this through an overhaul of the program itself, but really, again, moving more so to the front end of mitigation and funding some mechanisms about how to get this down to a state and local level where we don't continue to just rebuild in places that you're going to have the same event occur every 5 or 10 years.
Tricia, for those of you who don't know, Progressive is the largest writer of automobile insurance through the independent agency system, which is, I know sometimes you think of Darth Vader when you think of Progressive for the direct side. True story, I toured their direct side many years ago before she was CEO, and they played I was Darth Vader. It was really odd. I didn't think of it that way. But with all of the auto coverage, you have flooding issues with autos all the time. What are your thoughts on, and now you're big in homeowners, right. So what are your thoughts on flood insurance?
Yeah, so for those of you that don't know, we took a majority stake in American Strategic Insurance in April of 2015, so flood is near and dear. I'm agreeing with everybody in terms of we have to do something because the federal government is $25 billion in debt, so we have to figure that out. But it's really about having accurate rates. It's the basis of every insurance policy. So from an automobile perspective, we prepare for those. We put our cat loads in. We understand our policy density in different areas that are likely to flood. On the homeowner part, we actually would love to write more flood in areas where we are not fully exposed. And actually, in Florida, we're starting to do that with ASI. About half of our new apps in Florida, not necessarily on the coast, but in Florida, are private policies. So to me, it's about if it can be, if you're going to write private insurance, it has to be comparable to what you can get elsewhere, and that can't happen until we have the right rates. Right. And there's a lot of pressure because no one wants to pay for that, and then it becomes, well, we'll leave it at this rate from the federal program, and so it's really a catch-22.
One last legislative issue, we'll move on to the private marketplace. The Federal Insurance Office has been in existence now for some years. They have no regulatory authority. They're based in the U.S. Treasury Department. And there's a debate now in the Financial Services Committee as to whether to keep it, reform it, eliminate it. What are your thoughts on the Federal Insurance Office? Is it needed for international reinsurance agreements or not? You know the tension between the NAIC and the FIO. You want to see it continue? You want to see it changed? You want to see it eliminated? Greg?
I'll go with eliminated.
Eliminated.
And I would say right now, I mean, from our standpoint, we have enough regulatory bodies. I tell you that we live most by the state regulation. We believe in the state system. That's where we want to be able to take our issues on a state-by-state basis. But I just lived with the FIO situation for a number of years now. I don't really see it making a lot of fundamental changes overall. And to the extent that my biggest concern is the difference between oversight and solvency. And the FIO is just another way to get at a solvency issue, whether it's solvency standards or wherever it's coming from. And the oversight issue we have to fight on a state-by-state basis. So, whether it's a rate increase or whatever we're trying to do in whatever part of the country. And so the more those things get separated and the more the federal government tries to work out different ways to look at that, I just think the more masters we have to accommodate. We already have to deal with the rating agencies. We already have to deal with the NAIC. We already have to deal with another. So why do we have to deal with another organization? So I think there's a way to rationalize it. If it gets folded in somehow to the Choice Act, that would be better. I understand the need for international companies to be able to get on an equal footing so they don't have to set up operations in foreign countries. But I just don't see a lot of productive things coming out.
You need a limited federal insurance office so that you can have a voice for the property, casualty, and life and other insurance entities at the federal level. And getting back to that 86 Tact Act, I think that's what happened, is that there was no information from the insurance industry, and so the banks, they were there, they had all their lobbyists there, and they pushed what they wanted, and we didn't have a voice in the administration. We may have had a voice in some of the committees, but we didn't have a voice in the administration. That's what we need a voice for. What happened in 2008 when they bailed out Hartford and AIG, there was nobody to say really, well, you need to not bail them out because the states can handle it. And I think it's not over-regulation from FIO. I think it's more a voice at the federal level in the administration to sort of moderate what they would be doing and sort of help them. Because the holding company, there really is problems with the insurance holding company situation where you have, you don't have very good regulation at the state level, and you need to have somebody at least to work on that.
So Bruce, you don't want to give them any regulatory authority, but you like the voice in the administration?
Yes, sir.
Okay. Tricia?
Yeah, I don't think it's necessary at the domestic level. I think some international oversight would be fine, but I don't think it's necessary.
Mark?
We love it. We've going back to Dodd-Frank, obviously, working with FILE for a long period of time. Interesting perspective for Nationwide, insurance savings and loan holding company with over $50 billion in assets. So we have the Fed involved on a regular basis, and it has been valuable to Bruce's point about trying to educate about the difference between banking and insurance, how that goes into capital standards. I think that aspect, it's been helpful. I would also agree, I think that there's some benefit of having a voice that can look at some of the international issues, again, as you think about capital standards. But aside from that, avoiding duplication, redundancy, we have an effective state regulation system today. And the challenge that we see is the redundancy and or the potential conflict, where the Fed has a different position than what a state has as a position. So no matter which way you go, you end up in a challenge. So from that aspect, less regulatory authority from the Fed, but again, from the advisory piece, I think there's some benefit.
Okay, let's switch and talk about so-called disruptors, which I think is an overused term in the insurance industry. I remember when Allstate was going to sell insurance at Sears. When you went in to buy a lawnmower, you were going to buy a homeowner's policy. It didn't work out too well. Or Walmart or whatever. They were all called disruptors at the time. Then we had Google coming in. They were going to disrupt everything. They were in for about a year, launched in California. Bye-bye, they're gone. Now we have entities like Lemonade. They're going to come in and disrupt the homeowners and renters market and more. What's your perspective on these so-called disruptors? Are they passing fads, or is it real this time because of the whole insurtech phenomenon, the efficiencies needed in the industry? I'll start with you first, Tricia.
Before I do that, I want to address the Darth Vader comment. So that's in all fairness. So we obviously are the largest writer through independent agents, and I love you guys. And in fact, I just had our quarterly conference call with our investors and our analysts yesterday for our first quarter results. And our growth in the agency channel with new apps was up 15%. And don't clap after this, but our growth in direct was down 1% in the quarter. So we continue to love using the channel. I am a customer of an independent agent that I've had for many, many years, and he has all of my business, and even if it's not with Progressive, he has it. My dad was a Prudential door-to-door life insurance salesman, so I grew up in insurance, and so it's a big part of what we do. And in fact, some of the things when you talk about disruptions, I believe Progressive was on the forefront. And although we knew that it would cause some angst, at least initially, when we opened up on the direct side many, many years ago, we knew it had to be about the customer. Where, when, and how customers want to shop. And because of that, we were able to build a brand which we believe helps in every channel. Once you have that known brand, we all are rewarded because of that. I've talked to the guys from Lemonade. It's a concept that really is about the customer. I don't want to foreshadow how I think that'll turn out, but we have to be thinking from an opportunity or threat perspective, however you want to think about it. What do customers want? They want that quick claim. They want to be able to be back in the position they're in. Now, if you saw the first claim that happened with Lemonade, it was a stolen jacket, and it was like 3 seconds. I'm a claims person, so I immediately was like, oh, this is riddled with fraud. So I went right to the loss cost part of it. I think we need to understand and not dismiss the insurtech and the fintech. I don't think we should overreact. I think we should be thinking about why are they existing? Why are they starting? Why are they getting funded? And it's really because people get frustrated with our industry. So it's up to all of us to make sure we think about the customer. And that's why Uber started, because people wanted to be able to have an easy way to get their nice car right to them. And so it was really customers wanting that. So I've really challenged Progressive and our leadership at Progressive to be looking at these things, understanding them. We have a team that really looks at all of the kind of new companies that are coming up in the insurtech industry, and say, why would they exist? And what is it that they have, and why are they creating that we couldn't have? And I think about it in another regulated industry and how we need to get out in front of it. So obviously recently the airline industry has been under a lot of scrutiny, and if you're an airline CEO, you're thinking, of course I have to overbook because people cancel, and I want the plane to be full so I can keep prices low, which of course is very logical. We say things like that in the insurance industry. We're not thinking about the guy that got dragged off the plane. We've got to be thinking about, what do customers want? Think of those as somewhat threats, but more opportunities, and build a service platform around that is second to none.
By the way, if Murphy gets out of line, I'm dragging him out of this seat and throwing him out right now. And by the way, I was the Darth Vader when I toured the direct side there. That's what I was, the Darth Vader.
Well, let's keep it that way. That's good.
Exactly. Well, there's a lot of people here.
It's too bad we didn't have this yesterday. May the 4th be with you.
That's right.
Bruce, the so-called disruptors also, Mark's a funny guy.
He is. I noticed that.
He's a funny.
You're welcome, Bob. You're welcome.
You got to up your swag.
I'm thinking about
up
that
your
right
swag,
now.
Murph. Bruce, on the commercial line side, there's disruptors, there's now going direct and all those sorts of things. What do you see happening on commercial lines as far as disruption?
Well, for us, I think InsurTech is critical because of all the big data that we have. And so what we would like to do is harness that big data for the benefit of the agents, so that we can give the agents information, so that together we can sell more business and sell business at a better price, better selection. So what this is going to do, it's going to level the playing field, because data won't be the sole property of the large folks. Everyone will be able to benefit by it, and all of these InsurTech startups, some of them will fail and some of them will succeed, but we want to be involved in there so we know what's going on, so that we can see which ones might help the agents, either with a better claims handling, a better ergonomic situation for the policyholder, or a better underwriting situation.
Greg, we have 3 national companies and a super regional company, you. What's your perspective on disruption?
Well, we're not in New Jersey, though. We're not totally national.
Well, nobody wants to be in New Jersey, but he lives there, so he has to be there.
Someone's got to do it.
Yeah, somebody's.
Yeah.
What's your perspective on disruption?
All right, this is where we are. So I'll tell you, we spend almost every waking moment thinking about our agency distribution force and how to make you better. And I would say that's the tenet that we live by. We like to say it for the 1,200 agents that represent Selective. They are the quote-unquote Ivy League of independent agents. And we are pushing them hard right now from a customer experience standpoint, from an overall, when we service a customer, it's a shared experience. It's shared between you and us. And I'll tell you, when you honestly step back and look at the frictional points, the handoffs, the back and forth that a customer deals with in our industry, that has to be solved. And, we talk to our agents, and a lot of them said, oh, yeah, Murph, I know my customer, I'm good, I know my customer service. So we put out a survey that any one of our Ivy League agents could do to their entire customer base through what we call our ACE program. It's selective blind. Your entire inventory, you could do that. You know how many of our agents came back and said, oh, I can't do that survey? Well, wait a minute. If you're in contact with your customers all the time, why can't you do that survey? Well, I don't have emails all consistently in my applied system. I don't have my text, my mobile numbers all in the same place. So our best agents had to sit down and go through a data hygiene process to make sure they could cleanse their data so we could get to the point that they could send out surveys. And what our best agents are telling us right now, it's amazing what they're learning about their customer, that they're not communicating with them in the way that they understand. They're not available for response time quickly. Our ultimate goal is to develop a 24-hour seamless communication, we call it omni-channel, with our end customers, with our agents, and ultimately, we're spending a huge amount of money on this, by the way. We have a golden record internally so we can see all of the data about a customer now. It's all linked. We're putting a CRM system in front of it, ultimately developing an agency presentation panel so you can, from your system, can update that, and then you can see all the interactivities that have happened on a safety management report, on a claim, on an audit, on anything, a billing change. We would be able to update that together. And the reason why we can do that is because we only have 1,200 agents. And that capability to advance that in a franchise model is critical, because we've got to be able to service. You have to be able to service small customers, medium customers, and large customers, because you gotta know right now that somebody's running, and I don't care who it is, right, is running at your small business. And what are they telling you as agents why they're running at your small business? You're not servicing them in a 24-hour-a-day environment. The experience is clunky, blah, 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 right? You hear all the blahs and the blahs about it. But that's our focus, and I'll tell you, that's our goal, and we push to that. We put the customer at the head of the table, and our agents are moving in that direction, and it's been a bit of a rock up the hill, and we've been working on this for 3 years now. And first time we mentioned customer experience at an agency event, agents went, I don't know what you're talking about, do I really need to do this? I know my customer, that's the kind of, so if you're sitting there thinking of that right now, you've got to think differently, because somebody's gunning for you. And I don't care who it is. Amex, well, you name it. You forgot Amex in your long list. Somebody's gunning for your small business right now.
Yep. We're going to have to talk faster.
Fine, I will. I'll talk quick. Goodbye. I'll leave. Thank you.
I want to ask Tricia and Mark a question as big auto writers. What's the future of autonomous cars? What is Progressive and Nationwide doing to prepare for this developing phenomena, both from an insurance perspective, a research perspective, and how fast is it going to be here? What do agents need to know about autonomous cars?
Yeah, we had a great discussion at dinner last night with a few agents about this, and here's how we think about it. I really think about the transition to ultimately autonomous cars as horizons. So right now, our focus at Progressive is Horizon 1. We know we have a long runway to continue to bundle customers with our auto and home program, our Platinum and PHA program with our agents, and fully integrating and spending a lot of money on systems to integrate our auto and home policy for that. So we're focusing on that. In the meantime, I have a team that is called the Runway Project, and we're looking at and working on sort of Horizon 2. So think about maybe 4 to 5 years out, 5 to 10 years, all the sharing economies. So Uber and Airbnb and all of those things. So right now we have an agreement that we just signed for an additional year in April on the commercial side with Uber and our usage-based insurance in Texas. So we're continuing to learn a lot about that. On the personal side, we continue to add states with an endorsement for people that are Uber or Lyft drivers on that side. So we're learning more and more about that, and it really is about collecting data and understanding that, as well as collecting data that comes from cars. So we have an agreement, besides our usage-based, that we gather a lot of information about in terms of loss costs. We have an agreement with GM working with the OnStar program. So ultimately, the history of Progressive came from, many, many years ago, a big unit in the car called Autograph, to the wired unit, to now we do it. We have our UBI, our usage-based insurance, on our mobile device, and ultimately the car is a driving IP address. So we understand that. Now, to get to your question, I don't want to put my head in the sand and say it's going to be a long time from now. It's going to be a long time from now, because the vehicle-to-vehicle situation, for one. So until just recently, new cars were, on an annual basis, were being purchased at about $17.5 million a year. That's gone down a little bit. Average fleet is about 11.5 years. So to get any sort of change in the fleet takes a really long time, and we've seen that with other safety items. I think autonomous cars will be great for society, and so I think that's important. But the vehicle-to-vehicle, vehicle-to-infrastructure, all those things that are happening are going to take a long time, especially with as slow as things can be regulated. And I think, and this is just me talking, if I had to guess the order of priority in terms of more autonomy, it would be TNCs, probably commercial, because that's really where it would be in terms of the labor, and then autos. But again, we have a whole team that's working on that Horizon 3, 10 plus years out. What are we doing to get out in front of it? We're starting to build more rating variables into our next product model with cars that have safety devices. So we have a lot of data, but I don't think it's going to happen tomorrow. I think we all need to be thinking about it and thinking about how to keep an enduring business for all of us. But again, I think it'll be a different order than what is talked about every week in the Wall Street Journal.
What's nationwide thing, Mark?
Yeah, you know what she said. And actually, there is a lot of similarity. I think many of the same issues that were brought up, so not wanting to be redundant of the talk, but we have folks that have been looking at this for a long period of time, same dynamics. The one thing that we think also about the duration of time or what you're looking at the horizon before you would see this coming in, the one caveat that I would put out there and throw is I do think that there's going to be a strong push as we talk with some of the auto manufacturers as well about the social drive of what is going to create the speed that we may see the adoption or the advancement of the autonomous vehicle because of distracted driving. Right, so just drive into the office in the morning, my interstate route that takes me 30 minutes, drive into the office in the dark. I would tell you, you all see it too. Here's my objective survey information. 4 out of 5 drivers, there is a light that's flashing up over their face that they're reading or doing something. And I do think one of the interesting things that we see is the social pressure that will come on the auto manufacturers, regulatory bodies, as well as the industry to advance in this space on what could happen from the speed because of what we're seeing in this distracted driving space. With that said, I would also focus on some of Tricia's comments about usage-based, and I think it's more of the dynamic of what's going to be occurring in our industry beyond just auto. So you begin to think about all of the information that's available from a vehicle today. The same thing is coming about through sensors in properties, whether it's on the residential side or the commercial side. And I think you'll see an explosion of product development that is going to be more usage or real-time based. And I think that really provides a tremendous amount of opportunity. So, everybody talks about, you talk to these consultants that come in and want us as a carrier to pay them millions of dollars to give these great insights. I think at the end of the day, what's going to happen about, and they try to scare you with this, look at the revenue drop that you're going to see from an auto perspective. Again, there's a long runway on that, but there's also the dynamic of opportunity that's created. All of the data and the information that's coming about, the protection of it, cyber coverages that come around, all of the sensor information that's available across all kinds of dynamics today, looking at who are going to be the key aggregators of that information that then we as carriers will be able to provide new products and solutions to put into the hands of distribution to solve the needs that consumers are going to have in this changing environment that we're living in today. So I think that there's a tremendous amount of opportunity that comes about regardless of what you see from this time horizon of the autonomous car.
Bruce.
Yeah, Bob, I just want to make one point about this, and that is the autonomous cars is one thing, but there is a lot of things being done in the roads. And the roads are going to be smarter, and there are going to be sensors on the roads, and I think this information will be used throughout the industry, either in claims settlement or to help people get key information on how to drive smarter.
Commercial auto. A lot of carriers are experiencing some significant strains in commercial auto. Other companies like Progressive are doing very well in commercial auto. What's the fundamental problem in commercial auto right now at this point in time? Is it a lack of rate, or what's the problem?
Well, I think they've identified the more distracted driving. The economy is uplifting. There's low unemployment. Right. It's hard to get good drivers. I think what you're going to see in commercial auto is a lot of this InsurTech is going to go right into the cab of the commercial auto to help the drivers and to help identify the drivers, the good drivers. You'll get more information on your list of people that you have in a commercial auto policy, so that immediately you'll know when there's a new driver driving, maybe a driver that doesn't have permission to drive, and so you can work with your policyholder on making sure that the best drivers are driving. You get more fuel efficiency through InsurTech information, and so as a result, you can help your policyholder reduce their fuel costs for that. Plus, you also have, as I said before, safer roads, and you have experiments with basically driverless trucks, and that would help because you would reduce the fatigue that you have at the end of a long drive.
Bruce, you and I are old enough to remember the cyclical nature of the property casualty marketplace, and half of you don't even know what a hard market is, all the young agents. We talk about, us old guys, hard markets all the time, going, what is a hard market? I've never experienced that. Will we ever see in commercial lines a true hard market again?
You predict the future. You never know what's going to happen, obviously. You never say never on that situation. But what we did have in the hard market back in the 80s was the creation of the risk retention groups for casualty. And now those risk retention groups want to take property over, and that's ridiculous. Those risk retention groups should be abolished because you really don't need them anymore. They were just a product of the hard market. I always am amazed at how we're regulated very strictly by the states on what we can do, but then they say there's somebody new over there who wants a new idea. Oh, well, let's go with them. They don't have any surplus. They don't have a track record, but let's go with them because they're new. So the thrill of the new, I think, for some people in the insurance industry creates problems and creates more competition, unfair competition for insurance companies.
Okay, now I'm going to need short answers. Greg, M&A activity in the agency side has been incredible. It's continuing. Private equity capital flowing into the independent agency system. If you look at 20 years ago, it was primarily banks making acquisitions. Banks are almost not even in the game now. It's all PE firms. What's this mean for Selective? What do you think it means for the independent agency system?
I think what it means for us, obviously, is because we have such a different model, we're able to defend ourselves better because of the field nature that we distribute our products. So obviously, changes in ownership have an impact. But I think the one thing that the PE firms have learned, unless they keep some of the operation the way it is, and if they don't and they lose producers, they lose organic growth. When they lose organic growth, that hurts their future valuation. So that's our view on it.
Good answer. Bruce?
We've tended to not go with the large agency folks, the huge ones. And so as these mergers occur, we make judgments on how we want to go forward with them. But the fundamental thing is there's an agent, and the agent has his customers, and we want to work individually with those, whether they're in a large agency or a small agency.
Tricia, Progressive has the most appointed agencies in the United States of America. I think around 30,000 agencies. What's your perspective on the M&A activity in the agency system?
I mean, I think it's consistent with what we're seeing with even body shops, MSOs, and things like that. So for us, it's really, we like the broad coverage, and it really is about that relationship. And so whether it's a large agency or small, it's about our customer together, our mutual customer, and how it's served. And it really is, it comes to that relationship. That's why you want an agent, because you feel that desire to be taken care of. That's why I have an agent, and I know insurance. So to me, we're open to however customers want to come in, and it's that relationship.
Mark, a lot going on at Nationwide on your agency distribution side. From our perspective, all good things. For the most part, as far as what you're doing with your exclusive agency side and those sorts. I think you're evolving to our level, actually. And I was interviewed, as you know, by Insurance Journal yesterday, and I was asked by Insurance Journal why Nationwide was on this panel. And why don't you tell the agents in the room the number of appointed independent agencies versus your captive side?
Yeah, no, it was a great one. I had the opportunity to speak with the Insurance Journal yesterday, too, and the first question was, why would Nationwide be at the Big I? And I said, well, duh. We've had decades of working with the Big I and independent agents through a variety of different brands. Allied, Harleysville, Scottsdale, Farmland, the list goes on and on. We have 2,600 exclusive agents today. We have nearly 10,000 independent agents today. Over 60% of our sales revenue comes from the independent agency side. And our investment strategy for growth of distribution is through the independent agent network. We offer everything from personal lines to excess and surplus commercial. And we believe the best distribution model for us to continue to extend, to take advantage of what we think our value prop is the independent agency channel. So we'll still have exclusives. We still have exclusive agents, and we will continue for a period of time. We are actually in the process today of providing our exclusive agents with a program that would enable them to become independent if their business model fits for that. So again, we're very committed to the independent agency network, and I think you'll see us continue to grow aggressively.
That's good stuff. So we have just a couple minutes left before I come down and ask the audience for any questions. But on talent, there are going to be 400,000 job openings in our industry in 2020. Almost 500,000 jobs. What is our problem attracting talent to this industry? U.S. News & World Report says that the independent agency system, independent agents and brokers, is one of the best professional career opportunities in the United States of America, of any profession. Flexibility, community involvement and interaction, helping people in their greatest times of need. And yet nobody knows. And the insurance company side too is hard to attract talent. What is the answer, Greg, to attract talent to both the distribution side and the company side?
I think it's continuing to promote what we do, which you just highlighted. When you think about what do? You make the world a safer place, right? You focus on safety management issues. We put lives back together, and we are a form of capital, and we are becoming more and more tech-enabled through digital, mobile, and other things. I think those are the things that will attract people to the business. And I'll be honest with you, we don't do a great job in our industry ourselves, because you look at all the advertisements and other things, and some are running very much against what we do as an industry, and we need to continue to promote the positives of the industry. And in some cases, it's the one or two maybe badly handled claims, or you never get all the information about it, that paint us. So there's a lot that we do that's great, and we need to continue to promote that at the college campus level.
Bruce, I think the insurance industry is the second largest employer in the state of Iowa after agriculture, if I'm not mistaken. It's a huge, everybody thinks Connecticut is the insurance center. It's actually Iowa is the insurance center. What's your view on talent, attracting talent to our industry?
Like Greg said, you go to the universities, you work to try to get programs there, you work on recruiting folks from there, but then once you get folks to the company, you treat them right, you provide them with good benefits, you provide them with a good working environment, and you provide them with a way that people can work together for common goals.
Tricia?
I agree with what they said. We are even starting at the high school level to do some STEM programs, actually understanding and showing all the opportunities. Because when I think of my career, I've done so many different things, and it really isn't all about one thing or another. And so from whether the things you said about agents is perfect, like what an incredible job, and what a difference you're making in the lives of your customers. And so to me, we do a better job marketing and start even at the lower level to kind of say, hey, insurance is fun and exciting. Believe me, insurance in Cleveland, sometimes I have a hard time recruiting. So we bring people in, and then they see it, and they're like, oh my gosh, the depth of analytics and the depth of service, this is exciting. They just have to see it more clearly.
But you also have LeBron James there when you have that conversation.
That is true,
too,
yeah.
So.
We got the Browns and LeBron.
Right.
I-O.
Well, another Ohio company. So I would, and Bob, obviously Governor Kasich in our state started a council, Progressive is on it as well as nationwide, where we're actively engaged in bringing together the 17 domiciled Ohio insurance companies, the universities, some private sector areas, to try to create a PR campaign to show these great growth opportunities. I would echo the comments that were made here, but we've got a really unique opportunity as an industry, both on the distribution side and the carrier side. As you think about millennials, what is the thing that you continue to see in research? It's about having a mission and a purpose and the connection. What we do in our business is a noble purpose. We help people, and businesses recover the best that money can, but also all of our philanthropic activities and what we do as an industry to raise up communities. We just have to do a better job of connecting that, because I think we can be a go-to for potential employment based upon that.
Good. Well, I'm going to come down and ask some questions now from the audience. I have no clue what they're going to ask, so be prepared. Could be anything. So if anybody has any questions, I got Randy Lanois from the great state of Louisiana. He's going to ask this in Cajun, so you have to listen carefully.
Good morning, and thank y'all all for being here. Thanks
Morning.
for all you do for the Big I in the independent agency channel. Greg, my question is for you specifically. I have trouble saying that. You talked about Selective and being an Ivy League company. So on behalf of my colleagues here, we'd like you to invite you to come and do business in the SEC.
We are expanding, so we have some folks in Arizona, I think, that are here. Got a few states. We see New Hampshire here. We've got Southwest and Northwest won't be far behind.
And you do consider LSU an Ivy League.
Yes.
Be careful. Randy
Yes, I do now.
Randy played on the LSU basketball team, and that's no joke.
Hey, don't I get any credit for going to Dartmouth? What is this?
Yeah,
Ivy
right.
League stuff.
Any other questions or comments? Dave Walker from Michigan.
Thank you. Thank you. Good morning, and thank you all for being here. Mark, I appreciate your comments on the fact that you're focusing more and more towards the IA channel. Could any of you or would all of you like to comment on it? I think it's fascinating that ultimately you all come back to the IA channel at times, but could you comment on why many companies, not all yours, but many companies are constantly trying to experiment in different distribution channels and then ultimately come back to the IA channel?
So I would first just selfishly say we've never left, have continued to grow, and will continue to do so. But I think the dynamic, and maybe I'll take a tactic on this with the disruptor piece because I was the one that didn't talk about it. If you really look at the disruptors or what's going on, there's a ton of digital distribution. And if you really talk, whether it's Trove or Sure or Lemonade or all of these different folks, what they're doing next, there are folks from the industry, whether on the carrier or the distribution side, that have left and are teaming with tech folks that are trying to solve for issues that customers need. So I think why you see carriers continually scan the horizon of distribution is it's constantly changing what customers need and how you can best deliver for them. And I think probably why you see folks continuing to come back or to grow more aggressively in the independent channel. I think the model itself is oriented around you can take care of customers probably better than any other form of distribution because of your breadth. So that's my perspective.
Great.
Yeah, and even though we expanded to direct based on knowing that more customers, some customers would want to go that route, we've always and will continue to invest in the independent agent channel. That is a key reason why we purchased ASI, because we knew the independent agent channel needed to have a home company that we could bundle with. So that was a $1 billion investment completely on the agency channel. In direct, we write a bunch of non-affiliated partners. So to me, this is very important. It will have a long future and has had a long history with us, and we are very committed to the IA channel.
The independent agent, David, is something everyone comes back to because the independent agent has the clients. And we want to have revenue. If we want to have revenue, we've got to get them from the independent agent.
Good. Lisa from Texas.
Good morning, and thank you for being here. Nothing was said this morning about cyber risk, and specifically that risk within the autonomous vehicle space seems like it could raise some real problems. Any comments?
Yeah, I would agree wholeheartedly. First of all, I really appreciate your nationwide blue blazer. That looks really good. I thought you were going to stand up.
Progressive blue,
I thought you
actually.
was
I
going to
don't know.
sing the jingle as we went. But
You have a jingle?
oh, I could do it. So no.
Then I'll have to dress up like Flo, and it'll be.
yeah.
You have a jingle.
Chicken parm, you taste so good.
Here's an inside story. Peyton Manning actually hates chicken parm. This is true. He said every luncheon that he goes to now he gets served chicken parm. So, but I was remiss by not saying cyber. I agree wholeheartedly with you. When I talked about new products coming out of this environment, obviously cyber will be, I think, a very critical product line for us all moving forward.
Any comments, Tricia?
No, I agree with that. And so I thought, as we talked about the different horizons, there's different levels of cyber, and we have people working on and trying to understand what could happen if this happens and kind of doing gaming theory around that.
Since we just gave Peyton Manning a shout out, if you want to say anything about flow, you're certainly welcome to. I will tell you that Tricia's predecessor, Glenn Renwick, the previous CEO, great guy, and I was asking about flow, and he said, Bob, someday I want to make as much as flow.
I agree with that. And whether you like her or hate her, you know her. And I still get notes, and I have for years, from customers and people saying, could you set me up with her? Does she sit in a queue by your office? It's like, no, she's an actress. So, she's put us on the map, and it's been a great thing for her and for us.
By the way, Murphy's pitch man publicly is John Marchione. He's right up there with Manning and everybody else. So, any other questions? There's one back here. Ed Davis from the state of Oregon. Greg Walden, your congressman, did a great job last night.
Thank you. One of the things that you've talked about this morning is the image and expectations that our customers have of the industry. And I'm wondering if sometimes the advertising that we do creates expectations up to which we will not live, in Winston Churchill's format. Examples, for example, when Flo and her cohort are out fixing the house and reinstalling things, is that going to create an expectation that whenever I have a claim, the insurance company is going to come and do all this for me, as opposed to letting me make my own choices and go on?
You know, I'm thinking most consumers know that that particular commercial is really about protection. And so when we think about most of the things that Flo has said in the past around savings, and she's kind of quirky and you want to be with her, we're trying to go, especially as we have more and more preferred customers, go to use the Flo image, and actually we call it Flotection, and talk about, hey, you're going to be protected. I think where that comes into play then is, and where the rubber meets the road, is through our claim service, both on the property and auto side. And we have spent a lot over the years in terms of service centers and immediate response, and really making sure our customers are top of mind. So you get that feeling, and the feeling what we want with those commercials is protection, and we're going to remove the burden. So we're going to help you, we're going to be your quarterback and take care of this, because this process is really cumbersome and people don't go through it very often.
Let me just add to that. I will tell you, this one is a little bit of a lightning rod for me, but I'll be careful in my comments. I think some carriers promote an E&O exposure relative to the type of policy you sold them, and things that are covered or not covered. What's covered under a homeowner's insurance policy or not. You're a zombie apocalypse. Apocalypse is covered, but some other things aren't. I don't think those are really helpful relative to the image of the industry, but I will tell you the level of expectations of customers and the response that they want to have is significantly higher than we realize. They want to be communicated by text. They want to be communicated. Whatever it is they want is what we need to build. So I will tell you, response is critical. Status updates are critical, so we want a status update of the history of what's happening, whether it's on a claim, whether it's on I got your bill, oh, by the way, your payment's due in 5 days, oh, I received your payment, or I haven't received your payment in X amount of days. All of that level of connectivity, and then ultimately pushing more out to the end customer in terms of claim avoidance, whether it's a hard freeze coming or a tornadic activity, hail, flood, whatever it is, we've got to get much more proactive in what we call in our organization contextual information out to you, whether it's a campaign, a quote-unquote product recall on a vehicle, whatever it is, co-branded with our agency and the company, pushed out to that individual in fast response. So you're the one that told them, oh, by the way, I have a Takata airbag in my vehicle. I didn't know that. And so I will tell you, the response is got to happen, but there are things that are out in the industry, I think, that are negative, and that put a bad image on the industry.
One size doesn't fit all. The independent agent has a number of companies that he or she works with, and they have a range of prices, they have a range of coverages, they have they have the consumer, and they can determine whether the consumer wants to have a gold-plated claims experience or a bare bones claims experience based on their knowledge of their customers. So I believe choice is great, and I believe that the independent agent is the one that can decide decide and give the information to the consumer on what type of claims experience they want to have.
I am shocked that zombie apocalypse is not covered in the basic homeowners policy.
Right.
Soto's been selling that coverage for years in Miami, so he just learned something new today. Last question is Jill Ahart Roth from the Commonwealth of Virginia.
First of all, thank you guys so much. I think this is one of probably the best CEO panels we've had.
Thank you, Jill.
And you couldn't have led into my question any better than this. We're all small businesses. We don't have the funds that we can put into all the research for the technology that is coming into the disruptor portion of this. Like you said, our customers want quotes now. They want claim service now. They want claim service at 2 o'clock in the morning. We're not prepared to do that. A lot of our offices don't have the capability to do that. We look to you, our companies, to provide us with resources to allow us to have that kind of, to compete with the directs. Is there anything you all are doing to provide the independent agent side the channels that we can respond to our clients in the way and time that they want us to?
Let me take yes, we are. The answer to that question is yes. As I mentioned earlier, it's a shared experience. Our goal is to have our agents open 24 hours a day, regardless of your infrastructure. And you know, we're out progressively pushing. Good pun for you.
Thank you.
Are you doing that nationwide?
Yeah, I know. I'm working on that one next. But you know, in terms of digital kits, social media, things for you, we are actually built a multi-thing for our agents to sit there and go, here's base camp, it's a journey. If you want to get to the apex, you want to get to the top of Mount Everest, which is 29,029 feet, there's things that you have to do along the way, there's things that we have to do. But I will tell you, our goal is to be the infrastructure and back office for our 1,200 agents so they can be open 24 hours a day. We can service that customer, and even if it's, hey, you know what, you need something done on a policy that we can't do, only because your producer knows only that information, then at least we'll make sure that your producer's aware of that, and then we return that phone call first thing in the morning. So, you know, there are certain things that you can handle in a seamless transaction, first call response, but our goal is to be the 24-hour-a-day environment for our 1,000. That's what we are focused on right now.
And I would say something about, so Nationwide specifically, number one, we are consolidating all of our brands under one. It creates a whole host of opportunities for us, over $1 billion of cost savings, and our focus there is to do a couple of things. The first of which is to continue to enhance all of the capabilities from a servicing perspective that you at a local level may not be able to do, but a bunch of that is about customer self-service. As we've talked about the dynamic, 2 o'clock in the morning, wouldn't it be nice if your mobile device could actually perform? How many of you at night really hope that you can call somebody else for service, right? If you could fix it yourself in 15 seconds, do it really quick, that's where we believe that the world is going, and we are trying to deploy those capabilities that you can use them at your local office. And again, the plug here, I would say, the Nationwide piece coming into the independent agency, we want that brand to resonate, to drive more customers to you. And then once you're there, you're going to have capabilities across that aspect that we can do for you that would be cost prohibitive for you, helping you drive more revenue.
Yeah, for years we've had 24-hour service for actually more than a decade to be able to take care of things, because you can't work 24 hours, especially a small business, which I think is such an important part of the independent agent channel, be a part of the community. I agree as well. You know, we're working a lot on our app that can be on the agency channel and every channel. And our focus has always been for all of you to do what you do best, and that is sell and protect and start that relationship. And then we can take care of the claims and and we can take care of servicing small things that people want to do at 9 o'clock at night. So we want to do that so you can increase your business.
Bruce, you wear khakis at 2 a.m. with Jake from State Farm. I know that.
Do that. Jake from State Farm's khakis are now posted on a wall in a bar. So if you want to see them, that's where they are. I believe that the agent needs to be compensated for doing activities at 2 in the morning. So I think that there needs to be a level of compensation for independent agents that reflects the type of claim service that companies expect. And we're going to make sure that if the agent is involved in certain activities, that they're going to be properly compensated.
I will say that the Big I and TrustedChoice.com, and we are an investor in a company called Insight. We are doing a tremendous amount of work on 24/7. That's what customers want, and it's what customers are going to get from the independent agency system. A lot of work going into that, a lot of brain power, working with all of you as well. So the last question is going to be, who is going to win the World Series? Okay? And I know what Tricia's going to say. You have to say this, but I'll start with you, Greg.
You know what? I'm indifferent. Baseball's too slow for me.
It's
too, you know what? I cannot.
Okay, now I'm ripping you out of the chair.
Say, I cannot watch.
You're out of the chair.
I'm done. I can't watch a baseball.
Bruce?
It's too slow for me.
Well, the Cubs seem to win World Series in twos. They won the 07 and 08, so they're probably going to win next year.
Let's start with the NBA. First, the Cavaliers are going to win that, and then at Game 7, Progressive Field, the Indians will win.
I knew you were going to say that.
A name that nobody talks about, native of Denver, Colorado, the dark horse, first place in the National League West, your Colorado Rockies.
Hey, the Nationals just destroyed the Rockies. But now, I'm going to the biggest expert I know on who's going to win the World Series. She is never wrong. My wife.
Washington Nationals.
There you heard it from the expert. Nationals will win the World Series. So I want to thank the panel. Thank you for your incredible partnership with the Big I, with the independent agency system. Anybody wants an appointment by one of these companies, see them afterwards. Thank you very much.
Thank you.
Thanks, Greg.
Thank you.
Thank you, Bruce. Thank you, Tricia.
The Big I thanks you for attending this year's legislative conference.
Exit.
Please join us again next year in Washington, D.C.